Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Welcome to another episode of the Tech Behind FinTech. I'm really excited today. I'm joined by my guest, Hans Tesselaar from the BIAN network. How are you today, Hans?
I'm great, thank you. How are you?
I'm doing wonderful. Today, we're going to discuss the billion-dollar banking problem. Can standardization ensure survival? It's a topic that it's very interesting. This is the first time we're discussing something of this nature. We'll discuss what Hans does over at BIAN and so forth. Before we get into that, let's do some housekeeping. We are the Tech Behind FinTech. We are streaming live from Facebook, LinkedIn, and YouTube. We have a separate stream going from Instagram. Those on Instagram, if you want to see the guests, go to techbehindfintech.com and you'll be able to see the live show there. Without further ado, let me introduce my guest. Oh, last thing. If you want to drop comments and we'll add it to the show. This way we'll keep it interactive. If you have questions, don't be shy. Now, without further ado, let me introduce my guest. Today's show topic, as I mentioned, the billion-dollar banking problem. Can standardization ensure survival? Hans Tesselaar is the executive director of the Banking Industry Architecture Network, BIAN, responsible for the day-to-day operations, PR, new member acquisition, and long and midterm strategy. BIAN is the home of more than 100 leading banks, software vendors, service providers, and consultancies. Each member combines their industry expertise to define a revolutionary banking technology framework that standardizes and simplifies the core banking architecture. So now, with that said, let's get into it. How did BIAN start?
Well, BIAN started in 2008. There were some primarily banks who sat together and said to each other, we have a serious issue. We do have our existing IT environment, we will now call it legacy systems, and it is extremely expensive to add additional functionality to that environment. So it's extremely costly, risky, and so forth. There must be a simpler way of doing it, and let's see if we can solve that integration topic. So our mission statement is more or less how to solve the integration issues. So they started in 2008, and it was some major banks, but also as an example, Microsoft as a tech partner. And we started to creating architectural models and identifying all the elemental functions that should be in a bank that does everything for everybody. Because if your mission statement is to solve the integration issue, the first question that you need to answer is, what is there to integrate? Dus it started from a way for banks to see, can we be more efficient and effective in our IT environment? So how can we move away from those monolithic systems? So that was the starting point.
No, that's a good point. So 2008, was that year was the financial meltdown. It was a cataclysmic global issue. Is part of that meltdown and the crisis that we suffered there, is that another factor of why BIAN started? Because it's a very interesting year to start something like this.
Yeah, all the budgets were under pressure, of course, due to the financial crisis. But there was still a huge demand to recover from the financial crisis, to provide better products. Also, the whole regulatory and compliance issue came up. So, in essence, much more need to be done with less money. So, if you then can find a sort of standardized way and off-the-shelf solutions, that is a huge cost saving. That was one of the triggers.
So, right now you guys have 100 leading banks. When it first started, how many of those, how many banks first started it, or like how big was the organization at that time?
So I joined in 2011, and in that moment we had 14 members, 1-4. So it was, let's, to simplify things a little bit, let's say it was 50-50, so 7 banks and 7 vendors.
What's the last part? 7 vendors. Okay. Oh, wow. So in 2011, when it first started, it was obviously in 2008, it was less than 14, I assume. So you come
Yes.
along in 2011, it's 14, but of those 14, it's really 7 banks, right?
Yes.
And 7 vendors. And
Yeah.
then we grew into 100 banks over the last 14 years.
Yeah, well, 100 members in total. So that again is a sort of 50-50.
Okay.
So it's about 50 banks and about 50 vendors, and then we have also 4 academic partners like Carnegie Mellon in the US,
Okay.
who help us with project support if needed.
Okay. How difficult was it when you started in convincing banks to come on board?
It was extremely difficult because in those days, each financial institution had the idea that if they would say anything of what's happening in the bank, they are revealing huge secrets. So it was very difficult to get an open dialogue in the beginning. So we need to help them and convince them that we were only discussing non-competitive stuff. We were discussing the plumbing of the bank. So it was not about market groups or rates or segmentation and so on. So that's something we are just looking at. What do you need to do, and not how you need to do it. So it took a while for the participants to open up and share information amongst each other.
Now, it's interesting because, not only from a competitive standpoint, but, from my background also in working in banks, you have to take a lot of the regulatory training and things of that nature. And I can see from a regulatory standpoint, there is a possibility of some sort of, monopolization or fixing the market when you have all these banks coming together, right, and discussing things. So was that a concern as well?
But it was a perceived concern, not a real concern. So when we identified that could be one of the hurdles, we got I've got the name. So the anti whatever in place, so that everybody has to underwrite and they have to read it in front of each meeting, that we don't are allowed to discuss competitive stuff. So we are not allowed to discuss market pricing, demographics, and so on and so forth. So that is embedded in our bylaws.
Okay. Something I'm interested in before we dive into standardization, right? How did that initial pitch go, right? So you're at 7 banks in 2011. You're going approaching new banks. How did you set up those meetings, like, to get connected to do it, and how did the turnaround go in terms of convincing them that it saves money for the collective?
Yeah. So what we did and do, that we organize regional meetings. So we always try to find a host, primarily a bank, and then we send out invites, and we invite people to participate and join us for free. So there is no cost involved, there is no obligation, and then we have discussions with the members and the non-members on what we want to achieve and where we are and what the hurdles are and what we need to solve. So we take them into our journey, and then I remember from a few years ago, it was a new, let's call it prospective bank, and they had their things before they had received something, And then what happens is that after a day, the CIO came to me and he stated, after a few minutes, I was completely lost who was the bank and who was the vendor. I couldn't see the difference anymore. And you would expect one side of the room, the banks, one side of the room, the vendors, and let's try to convince each other. But he said, after an hour, I was completely lost who was who. And I think that is the strength of what we try to achieve.
All right, so I'm gonna read. I want to just do a summary so I understand it and the audience understands it, because I like talking about situations like this where you started small, you grouped. I like to understand those steps, right? And how you did it. So you have about 7 banks. You leverage the banks that you currently have to say, you know what, we're gonna host a meeting at one of your locations. You invite prospective, non-members for free, whether they're in the tech staff, CIOs, or so have you. That reference point, okay, lack of, I'm just going to throw banks out here. I'm not anyone specific, but as an example, let's say you hosted at JP Morgan, but now you start inviting BOFA or ING or different banks there, their technology. They come, you start talking about a collective overall problem that everyone's facing, right? Then you start saying, okay, look, here's the journey and how we're going to solve this. Here's the input here's how we're helping to solve this problem that all of you are facing. Here are the people currently involved in solving it. And, you can come on that mission also, right? And then from there, you seem to have grown, your bank by more than 10x over the last decade plus. Does that sound accurate?
Yeah, that sounds accurate, but there is one thing in addition. We are not for profit, so we don't sell anything. So what we do when the membership agrees that a deliverable is mature enough to be published, then we make it available for free for everybody. So you don't have to be a member to get access to the material. So there are a lot of organizations. So as an example, we are today running our service landscape 12.0. And sometimes I get an email from someone who says, I'm bank, whatever. We are using 3.0. Can you help me? How can I migrate from 3.0 to 13.0 and or 12.0? And I've never even heard of them. So there are a lot of organizations around the globe using our models without us knowing it. And they practice and they have questions and they join our webinars or podcasts, come to our meetings. And so it's not our goal to become the largest organization in the world, but it's our goal to get the highest adoption rate. And so the members pay a membership fee. Out of the membership fee, we run everything we do, and then we make it available in the industry. Of course, there is a difference that non-members have read-only rights, and the members can download everything. Of course, there must be a fund, and the members help us to create the content. That's the way we do it.
So the non-members read only, but the members, they can actually make changes and invoke what will be the new standard. Is that accurate?
That's accurate. Yeah. So we have working groups, so they cannot do it on their own. They can there are working groups creating content, for instance, on payments or on loans. They create the content, and then the group says, okay, this is a way to do it. We agree on it, and then it becomes the standard. So you can influence it as a member. That's the underlying idea.
How do non-members gain access to this information?
To our homepage, BIAN.org.
Oh wow! So it's freely available.
Yes.
Have you seen fintechs, leveraging your models?
Yeah, well, it's difficult because we cannot. It's for us difficult to keep track of it. I can only respond to that out of the conversations we have with fintechs. And there are always a lot of fintechs who stumble into us, want to know what we are doing, how it can help their problem, solve their problem. We have a special membership category for fintechs, so that they can also download all the materials. So for organization until 50 people, we do have that special rate. It's 5,000 euros / on an annual basis. So that give the fintechs, because my personal observation of fintech is that they are focusing primarily on low-hanging fruit. So they have an idea how to improve payments. So they have an idea how you can do consolidation. But banking is more than payments. So if you look into our materials with the knowledge and the entrepreneurship that the fintechs have, there is a wealth of opportunities that they can pick and choose, because we described everything. So everything you want to know about the bank, we describe. We describe the functions. We have about 1,300 sample process definitions in place. So how to onboard a customer, how to initiate a loan. We do have API environment with 250 pre-built APIs everybody can use. So there is a wealth of information. Then it needs the creativity and the technical skills of the fintech to monetize that. And it doesn't become more difficult than that.
Wow, but look, I'm kind of blown away and amazed, because I haven't really heard till we met at Money 2020. I didn't know that BIAN existed. I didn't know that what you do, and I didn't know also that this is all available. But because what you're saying is extremely powerful here, right? You essentially have the process of how a bank works on every single level, end to end. And now, in addition, you have the buy-in from the leading banks across the industry agreeing to this, and also seeing different ways that they can enhance their services. But if I wanted to get a through Z understanding of banking architecture, I could download your documents for free to learn all this stuff.
Yes,
that's absolutely amazing.
Yeah. So but that's why we are unique, and that's why we still, after all those years, exist. And we are in the process of model is, after all those years, to complete the model. And not every part of the model is as mature. So retail banking is more mature than wholesale banking, as an example. But there are now more parties interested in wholesale banking. We started a few years ago with CIBC in Canada on wealth management. So wealth management is extremely mature. And we so we started in creating architecture models, PowerPoints, PDFs. You know how that is.
Yeah.
And then we started to put it into a repository, so a digital repository, so that you can download the models in your own environment, and then you can tailor it to your own needs. Then we added process definitions to it, and we had the shortcoming more or less. If you have the processes, then you also need to have the data. So we have built an extremely extensive data model, and the data model covers the whole bank, is fully aligned with ISO 20022, the messaging standard that is used around the globe. So, and we linked our APIs, the API endpoints, to our data model, our business object model. That implies that majority of our APIs are out of the box ISO compliant. So we start from, let's say, PowerPoint PDFs to also providing digital assets. So I think that is the shift that we made in the last 5-6 years.
Many questions before I go into it, right? You mentioned that your retail banking is more mature. Can you just, for the audience, can you help us understand the difference between retail banking and wholesale banking?
Yeah, well, retail banking is, of course, the business bank does with you and me, yeah, as retailers, as consumers, and wholesale banking is for corporates, corporate loans, trade finance, and so on and so forth. So that's, but yeah, you can wholesale banking or commercial banking. There are different names for the same part. But when we started, the let's say the pain for the banks was primarily in the retail space, in the consumer space.
And do you see, because from different banks to, obviously, you have your mega banks to your regional to your credit unions and so forth. Are credit unions, leveraging your services the same way
Yes.
like bigger banks are?
Yeah. So what we see, so what now is, of course, since 5-6 years, a hot topic is core banking transformation, moving away from your old legacy to a more agile environment, into a sort, let's call it best of breed environment. And that issue, that is of course very dominant at the cities and the wells and the JPs of this world, but it also becoming now more and more dominant at the credit unions and the tier 2, tier 3 banks. So they all financial institutions need to solve the same issue. How do I modernize my IT environment? And if you're small or if you're large, that is, yeah, the question of how deep are your pockets? So what can you afford? So what? So just to help you a little, in my board, I have HSBC, I have PNC, I have Wells and Citi, and we had the APMC. So they are the largest banks, and they can afford to spend money and resources to develop a model for their own needs. But in the meantime, they also helping the credit unions and the regional banks and the community banks by making those models available for free. So that's a little bit the model that is in place.
I got it. Could you mention core banking, and can you describe what core banking is so people can understand why it's so important, and how it impacts like the base of the bank in terms of the day-to-day transactions?
Yeah, well, the core banking system, in essence, in its purest form, that doesn't exist, but just to help everybody a little bit, is more or less a ledger where you have the money in and the money out. That's what you need to do. So how money is on the account, how much money going out, and you keep track of the transaction. So it's a transactional ledger. But the banks are one of the first, similar with the insurance industry, who started to automate in the early. So when I started in IT in the early 70s, it was at the bank. They had IT systems. All the other people, other organizations, hardly. That also implies that the systems that they are still running it on are, yeah, outdated, are old. And because the technology didn't enable it in those times, they not only have the, let's call it the ledger part, but they also have the client part, they have the risk part, they have the loans part, they have the savings part, all in one monolithic system. And that's now the problem. So how do you move away from your monolithic system that prevents you to be agile, to prevent you to bring new products and services faster to your clients? And that is the transition that all financial institutions are in. So how do I transform my core from a monolith to a thin ledger with all the satellites around it that have the best of breed. So you have the best loan solution, you have the best CRM solution. You don't have something that is a sort of in the middle of the road solution. You want to have the best of everything, and you want to be flexible in phasing in and phasing out those solutions. So that is the journey that everybody's undertaking. So we need to shrink the core, we call it shrinking the core, and getting the non-core functionality out that is being moved in over decades, and make them separate entities. That's the transition and the intellectual challenge that we have to go through.
I mean, the whole core banking and transforming it from a legacy to more of a modern has just been an ongoing problem, And the biggest question, or the most straightforward question someone would ask, is why is it so difficult? Like, with all the technology that we have right now in terms of how we build modern applications and so forth, why is this problem been so difficult over the last, decade plus?
Yeah, first of all, because everything is interacting with everything. And when you look at an old core banking system, the monolithic one, it's usually 9 out of 10 times it's a COBOL environment. So almost all the COBOL programmers are dead in the meantime or retired. So that's an issue. And then to disentangle the functionality, so where do you cut it off? What is the right place to cut it and move it out? That's of course a question. And in the meantime, the bank needs to be up and running. So it's more or less like your Formula One car that you have to change the wheel when the car is driving. So that is the challenge. So and in theory we know how to do it, but in practice it's much complicated.
That was interesting because, just in thinking of IT, I mean, you always think about, okay, we're going to make the transition, whether we have to bring production down to make the transition overnight. But in what you're saying, there's no bringing this down. It has to stay up constantly running while we make this change, right? We have situations in which it's written, it's not only hosted on legacy systems, but it's written in more of a legacy language that's non-supportive at this point. So now we have to figure out how to also decouple all of the various functionality rather than having it in one monolithic. It's like, how do we now decouple it? Leveraging APIs, leveraging microservices and so forth, all the stuff that modern applications use. So it's almost like literally building something totally new in parallel, and then figuring out, when are you going to make the switch, I guess, or because you're not leveraging the old functionality. You literally have to build.
That's not completely true, because we also need to understand that let's call it the core function of core, to call it like that, functions very well. So the banks are running. You get your statement. The ATMs are doing it, and so on and so forth. So, but the question is, what should be carved out of the core? So I don't think that at the end the old core will completely disappear. I think there will be still bits and pieces that will be up and running in any way or form, but in a very shrunken fashion. So what we start thinking about it, how could that work in BIAN? And we came up with an approach that we call coreless bank. So the starting point of our thinking was, can you run a bank without a core system? That was the first question. And so we start discussing it, and at the end, let's say in theory you can, but technology doesn't enable it. So that's something else. So then we said, okay, if we cannot do fully coreless, how can we then do less coreless? So we started a project at the coreless bank, and we built 4 versions of the BIAN bank in let's call it in a coreless manner. So we started with the first one. So can we build a bank based on those principles with our map? So we started with our members, thinking about what would we do. We want to do simple things. It was a proof of concept. So it was about opening a savings account and a checking account and apply for the loan with three functions. So we educated all the parties involved on BIAN. Then they started they did 2 sprints of 15 days to build it. And it took us a total of 10 weeks. So in 10 weeks, we had the BIAN bank, where you could apply for a savings account, a checking account, and a loan, running in the cloud. It was running software, and we did the real KYC. And of course, it was standalone. It didn't connect to anything, but we could demonstrate that by using the BIAN model and using the defined interactions that we defined by our API/services, that you could create something that you could connect it to an existing current account environment, and then have KYC and risk and loans and payments in a best of breed environment. So in total, we did 4 iterations to demonstrate how it could work. So we not only did it on paper, but we built it. So it runs. So you can demo it on the screen.
So, I mean, with that example, right, you're building something totally new in parallel, not leveraging the coreless concept in a brand new bank. So would that be the approach to transition out of a legacy core? Or like in what you just said, why would they still need certain functions of the core if you're building everything with these modern?
But then, so if you do it like that, as you just described, then you need one moment in time, you need to pump over all the data in the, let's call it old core to the new core. So if you have a bank with 40, 50 million customers with all their transactions, that is also a huge undertaking. And so that's why you see that, let's say, starting in a green field and then move from existing to the green field is also not a very successful way. So what you see is that you keep your existing core with 40 million customers in it and all the transactions, and you carving out the non core specific functions, so that you become more agile. You say, I have a better loan solution, I have a better payment solution, I can move from an embedded CRM to Salesforce, just to make it up, and so on and so forth. So what we demonstrate now that is feasible to move with your existing core to a best of breed environment. And because we have identified all those functions, then you can also say, okay, which are the functions that should not be in the core? And then you can say, okay, I separate them to something else. But because we also described in our models the interaction between the different functions, you also know let's say out of the box, the interface you need to build, the API. And we have built all those APIs for the model. So the APIs are available. So the connection between your shrunken core and the new functions are available out of the box.
So let's say, hypothetically, I'm going to start a new bank, like a neobank, something totally modern. Yep. I can leverage your model to do that, and then I could have a coreless environment.
Yeah, so you see that there are some of the, let's call them the new core banking providers, like 10x and Thought Machine and Technisys out of Argentina. They offer the minimal core. So that is their pure offering. And then you can use the model, and we did one proof of concept with Thought Machine. They say, okay, but now I want to do loans, I want to do mortgages, I want to everything. Then you go for all those different functionalities, you buy them separately, and you interconnect them using the BIAN model. So you always need a general ledger, a thin ledger, otherwise you cannot run your bank until today.
I got it, but it's very interesting when you start looking at it from if you're starting a bank from a real fintech disrupting, like I think they call it what, neobanks or something like that.
Yeah.
then you leverage something like you just said in terms of one of these products that you get the base, right? And then you have your leisure, and you say, you know what, we might not be ready for mortgages yet, but we can introduce certain functionality for our users that we can use, and then we can grow into adding other banking products later on. But right now, in essence, it's a small shop,
Yeah.
neobank that we're using. But that's basically the formula for a neobank.
Yeah. So, but you have to also take something else into account. So, I before I was in this role, I was working for ING Bank in the Netherlands, and as you might know or not know, so ING is more or less the inventor of the direct bank. So the bank without branch offices. That's what that. So internet banking. So they started in Canada to roll it out, and the people became a little bit ING direct, never heard of it. So they just put a Neo sign on top of a building, not there, but a building, and then people say, "Oh, ING," and then they recognize the logo and and then there was trust, because only with trust you can get customers, and it's not only by IT. So there also needs to be a trust factor, and of course, if you want to pay your coffee at the Starbucks, you couldn't care less. But if you want to have a mortgage or start a business, then trust becomes something else. So trust is also one of the most important factors for the successful bank.
I remember a long time ago when well, I don't know, I don't remember the exact year ING came out, but I remember using them pretty early, in that whole concept, and I would just literally a portion of the whatever salary I came in, I'll just send a portion to their savings because it was a great interest rate, better than my current bank. Obviously, they were able to give me great interest rates because then they have the overhead of branches. But what I found interesting that they did at that time, they didn't have branches, but they had, the name because you worked there. Help me out. I think it was like a boutique, but it's like a little storefront, right? It wasn't a traditional bank, but it was, what did they call that again?
Yeah, but they call it sort of coffee shops, eh?
Okay.
So let's call it Starbucks where you can get a loan. So I was in a few years ago in Toronto, and they had a sort of flagship Starbucks ING office there. And I think, okay, because we didn't have them in the Netherlands, so I think let's take a look. So I was sitting there, see what's happening there. So people drinking coffee, but you could also apply for a loan or opening an account. And there were no tellers, but people with an iPad just serve you, and everything was done. But at one moment in time, people became a little bit suspicious. What is that guy doing there all the time, looking on what? So the lady comes to me and said, "Okay, I am the engagement officer, a public engagement officer. So you're sitting here." So I explained who I was, and that I came from the Netherlands, and I was interested, and said, "Do you know the concept of the second floor?" I didn't know what the concept was, but usually when you have a bank, then on the second floor there was the vault and the staff and the administration. But when you are fully digital, you don't need them anymore. So the second floor was empty, and you don't want people rent it because they are on top of your money. So they made it available for startups. So you could rent office space there for by day, or what we now also know as the flex space. And then what they also had, and it's a great story to tell. That's why I tell it. It's nothing to do with the topic, but okay. They had a huge amount of skateboards. And I said, "What are the skateboards doing here?" And they said, "Yeah, we have a program in place that we go to a local manufacturer supplier." And then in this case, it was a local skateboard manufacturer. And we buy skateboards from them a little bit under wholesale price, and we sell them a little bit under the retail price. So they were selling skateboards. And then the profit that they made with the skateboard, then the guy from the skateboard factory could donate that profit to a local charity. So they had bicycles. So they were also very much engaged with the community around them. So homeless people. So
and you describe it interesting because it sounds like a community bank in a sense.
Yes, but it was ING Direct.
Yeah, I remember that. So it's funny that you brought that up. So I totally remember being early. Moving back, right? And
Yes.
I want to jump back into the concept of like what are some you mentioned a lot with buy-in and standardization.
Mhm.
What are some of the misconceptions people think of when they hear standardization that you have to now kind of educate them on?
Yeah, because people think when you standardize, you get an uh, you are in a sort of um, bounded area. You cannot do that. You are looking the same like your competitors, because you say if it's a standard, then we probably do everything the same.
Cookie
So
cutter.
how do we diversify? So the people are afraid of if we move to a standard, yeah, then we lose our identity and we lose our whatever. But what we are doing, we telling you what to do. So we identified everything you need to do in a bank, but we don't tell you how to do it. So if you want to have a branch office, then you can diversify yourself from a direct bank. But you also, but you in the branch, you can get money, or you can sign up for a loan that you can also do online. So we say this is all you need to do in a bank, but the way you do it is up to you. So in the early days, you need to identify a customer, and you identify the customer in the branch by a signature book. So you have to do your signature and look in the book. Yeah, it's you. Today it's PIN or biometrics, but the function identifying your customer is still the same. And so that is, and because we have all those functions and we know what information needs to be moved from one function to the other. Then if it's digital information or it's paper information or it's verbal information, you can still use it. So the standards give you huge flexibility. And I always said, out of my previous role at ING, the challenge is to be creative with your hands tied. So if there is a standard and you can be creative within the standard, you are the winner. You don't need to copy paste it.
It's so funny, right? I'm going to give you an example that's totally out of banking, totally out of the realm of this conversation, but it relates to standards. Here's why. Earlier today, right, I practice Brazilian Jiu Jitsu, and I was training. I train in the morning. So I'm training with one of my coaches, Kevin, and he's big on the concept that you just described. That's why I was laughing, because, you know, I'm not going to tell you exactly what to do, right? I'm not going to give you the step-by-step playbook, but I'll give you, here's what we're trying to accomplish. Here are some parameters, right, that you should abide by to effectively pull off this maneuver. But I'm not going to give you a step-by-step because you'll get lost in that. But if you understand the parameters, then you could be extremely creative on how to get to that end solution. Whether you're trying to choke someone and okay, and you're gonna wrap your arm around their neck, and you like, I want to kind of limit the space before I go into it. Just a whole concept there. So as you were describing it, I crack a lot of jokes with him about his concept, but
Yeah,
I
yeah,
found
but
it's similar to what you're saying.
yeah, but the good news is because if so, we are now discussing all the time the banks, but of course there are the service providers underneath. So if you know what you need to do, and you know the interactions what you need to do, then for the service providers it becomes more easier to provide a solution that they don't need to tailor for each customer, but that they can plug in at every customer that use the same concept. And of course there will be slight differences that you need to adjust something, but 9 out of 10 times it's very adventurous for the banks, but also very adventurous for the suppliers, because it makes it easier for them to bring in their solution and plug it in the environment that the bank created. So several years ago, I was at a sort of Money 2020. It was Cybos, and I was approached by a guy And he said, Hans, can you please explain to me what you are doing? What is BIAN? So he just, and I said, why do you ask? He said, well, I provide a core banking solution, and we are a core banking provider. And in almost each RFI, RFP, I get the question, can you plot your solution on the BIAN model? And he said, I don't have a clue what it is. So I explained it to him, and he understood. And then I asked our members, does that also happen to you? He was a non-member. And they said, yeah, in our case, as a member, it's 9 out of 10 times. And then
9 out of 10.
9 out of 10, the question was, can you plot your solution on the BIAN landscape? So that people, the potential buyer knows, what do I get? And how is it combined? And does it make sense? Or is there something top left and something bottom right? So that there's not a logical connection. And then I found out that it was an advice from Gartner to the clients. If you want to know, if you want to be more sure what you are purchasing, ask them to plot it. Then at least you get a common language. In a common language, you can see the offered functionality, and then you can decide, does it make sense for us, yes or no? Because the problem is, if you are a bank and you go to a potential vendor and say, I would like to have a loan solution, then the definition of the loan solution of the banks is probably completely different than the definition of a loan solution from the vendor. What's in, what's out, what are the add-on. So by plotting it on a model, you create a common language, and then it's much, much easier to do business. So that's what we see very often on a very primary manner.
How has that growth been, right? You're right. We have been focusing a lot on the banks, right? But do you see where if you're a vendor that does business with banks, it seems like it makes sense to be part of your network?
That's correct. And because the banks are, they don't want to spend that much money anymore on integration. So I go back to Gartner again, and a few years ago, Gartner estimated that from each IT dollar spent, and it is data cents, everything. So the whole IT dollar spent, 70 cents goes to integration. So you have only 30 cents left to do something new, to innovate or bring new products. So if you can bring the 70 cents to 30 cents, that's a huge amount of money that you can then use to improve your IT environment, to offer new products to your customers, and so on and so forth. So for the banks, the less they spend on integration, the more they have to spend or can spend on more innovative things. So that's also why it is a pro. If you are a vendor, say, okay, I have this solution, and it is BIAN aligned or BIAN inspired or whatever name you call it, then the bank knows it will be much easier for them to integrate it into their existing environment.
Interesting stuff. So I want people to really get that number, because that number went up. I know before it was 60 cents, now 70 cents, but it's over 500 billion annually on IT. Is that number still correct with the over 500 billion?
Yeah, well, could be.
Yeah. So
you just make the calculation.
Yeah. So, and it's title of the show. That's why it's the $1 billion banking problem. So I wanted people to understand, like, that number's a real number. So if you're spending over 500 billion, and we're saying 70% of that is on integration and not innovation, you're basically connecting new stuff to antiquated legacy systems, as opposed to figuring out, okay, here's the new standard, here's how we should move forward. You're constantly just patching.
Yeah, and that's correct. So we are also evolving ourselves. So our let's say goals for the upcoming 2-3 years is to help the industry make it much more easier to use our materials, because it's complicated stuff and it's not that easy to understand. For the expert it is, but for the not. So we have built some AI-driven tools that we can then say, okay, let's take your environment, use the tool, and the tool generates a report where they say, okay, this could be areas for improvement. this could be areas where you can improve your APIs. These are areas where your landscape could be improved. So it is work in progress. The API part is ready, so we can the comparison of APIs we can do. So AI will become more and more important in helping to identify where are the gaps and the overlaps, and what is the best way to migrate from old to new. So we see amazing results by the so we trained our own engine. We don't use public materials. We use our own engine to be sure that we have the right stuff. So we have now some tools in place for the members since November that are extremely successful, and that's just the beginning.
Right now, from general public, most people heard of Chat GPT and large language models. What we're seeing in the future is not necessarily an overall language model, but more customized, specific to a certain industry or entity. That, okay, we have our own proprietary data that we've collected. Now we're going to leverage that for a large language model so that you can get specific solutions on your problem. That sounds like what you guys are doing at BIAN.
Yeah, so I think the basis is still ChatGPT, but we have our own engine, and each piece of paper, PDF, PowerPoint, you name it, all the models we fed into the model, and it all has to be brought in vectors. And so there was a lot of effort with the development team in India to get all the materials. And so now everything is in. And when you ask a question, we also now have the chat function, you get a 1000% correct answer. When you ask the same question on the public one, there comes a sort of nonsense answer because it's complicated. And we use that same data to measure the quality of the APIs, to measure the quality of the processes. So the members now have access to those tools that they can use inside their organization to identify improvement points, and it makes it easier for them to implement the BIAN models. So, but that's why we need to help them in that complex journey.
So, I know you mentioned before that the data and the models that you have are available to non-members, but based on what you're saying, I assume the tools to help automate that process is only available to members. Am I correct in that?
Yeah.
Okay.
Yeah. So the models are available in a read-only mode for everybody. You cannot download them. That's only for the members. And all the tooling that's beside it is also available. And we are in an early stage to see if we can, together with Microsoft and Google and Google Apergy, we do some trials to see can we also generate code using AI out of the model. So we have the model and say I want to do a payment process. Can you then generate the code for the payment process? So that is early stage, and the quality is not good yet, but it will improve.
So I have a couple last questions just for like fintechs and vendors and also like banks. In terms of the cost to become a member, how does that process work?
Well, yeah. So we stated we are not for profit, and my board. So we set the membership fees in 2008, and we never changed them.
Oh,
So
wow.
each year I asked, can we change? Then I have more budget, but no, they want to keep the threshold as low as possible. So for a startup, let's say 50 people organization, it's 5,000 euros / dollars on an annual basis. Until 250 staff, it's 10,000, and above 250, it is 30,000, and a bank is a flat fee of 20,000, and everything is included. There are no other costs.
And when you say a bank, whether that's a community bank, credit union, neobank, just a bank in general, flat fee, 20K.
Yeah. Central. Yes, we make a difference for central banks. So central banks and federal banks is 10,000 because they are the legislator. They have a different type of business. but we have a flat fee for banks. The bank, despite your size or where you are around the globe, it's 20,000.
Got it. Listen, amazing conversation. I thank you for it. It's things that I've learned today that I had no clue about that I'll be leveraging moving forward. So I thank you for that. I always like learn new things from our guests. What we do on the show at the end is we give our guests time to talk about their company, where people can find them. Any last thoughts? So I'm going to get off stage and allow you to do that.
Yeah. Well, thank you. Thank you for still being in this conversation. It's my pleasure. So BIAN, you can find BIAN at BIAN.org. So BIAN.org is our homepage. And everything I just mentioned during the last hour, all the materials, the services, the events that we are organizing, and we are in 2 weeks, we have a meeting, a members meeting, and for non-members, open day and member meeting hosted by Standard Bank in South Africa. In May, we are in Sydney. In November, we have a huge 2-day meeting in Chicago. We are at Money 2020, and so you can find us at all kinds of different places. Also, of course, we have a LinkedIn page where you can find all the things that we are up to, meetings, papers, and so on and so forth. So I would like to encourage you. And again, we are not for profit, so I don't try to sell you anything, but I think it can be beneficial for everybody to take a look and then weight it for yourself and say, yeah, it makes sense, or it doesn't make sense. And yeah, we still are good friends, even if you don't decide to join BIAN. But I think take a look, learn. If you have a question, please reach out to me. There is an info button, and that is something we will always come back to you, and we will answer all your questions. So I think we're almost on the top of the hour. I'm here in the Netherlands, and you are all around the globe. Well, thank you for your attendance. Enjoy your day, and again, don't hesitate to reach out to me.
Thank you very much, Hans. We put the BIAN website on our screen, so it'll be part of this video in perpetuity. So I'm going to get it down now. Yep. Guys, listen, thank you very much for joining. Really appreciate your viewership. We are the Tech Behind FinTech. We go live every Friday, 12 p.m. EST. We have a newsletter out. If you have not subscribed, you want to subscribe. The newsletters at Tech Behind FinTech /subscribe. We have updates on our guests coming out, like Hans from BIAN and other future guests. We have the latest FinTech and financial news you'd be a part of. It's a weekly newsletter right now. It'll keep you up to date with the pulse of what's happening in FinTech. Plus, you get insights from our recent shows and our upcoming shows. So you definitely want to be part of the FinTech newsletter. So subscribe. And once again, it is absolutely free. So it behooves you to do so. Tech Behind FinTech /subscribe. I always say this at the end of the show, whether you watch this live, whether you've watched it, we're going to watch it tomorrow, next year. We thank you for your viewership, and we look forward to giving you valuable FinTech content that you can leverage and use. I thank you very much for your support. On that note, I wish everyone a happy weekend. Hans, hang out behind the scenes. We'll talk. Everyone else, cheers and have a great day.
Enjoy the weekend.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.